I want to congratulate the BSc committee. I want to congratulate Capello and his staff in terms of putting this together. I think we can all agree it's been put well together, it's professional. And I'm also amazed in terms of the turnout. It's been a very good turnout, and I can see it's a well-diversified turnout. I see corporates, I see capitals of industry, I see pension funds, I see bankers, I see small, medium enterprises well represented here. And now we're about to have a panel discussion. It's before you, the program there, about transforming your company through a listing, looking at listing on the stock exchange and its impact on achieving exponential growth, looking at moving from a private company to a public listed company, the impact on strategy and expansion, and then finally capitalizing on Botswana's comparative advantages to explore global and regional competitiveness. I just want to start by thanking the CEOs up here in the podium. When they were invited to be part of this panel discussion, I was surprised by the immediate response from all of them in terms of committing towards the program. But I'm also not surprised because these are the same CEOs that have been flying our flag quite high in Africa. Mr. Chandra, Mr. Gulam, Ram, and Com. And I think you know their respective brands. There are also CEOs that all of you know that they give a lot back to corporate Botswana, to in terms of social investments. But today they're going to give back in a different way. They are going to share their experiences in terms of listing and how it can be utilized for small to medium enterprises, as well as the more established companies in terms of can they unlock any other growth. So let me begin by introducing each one of them. First on my left here, Chandra. He's the Chief Executive Officer of Sefalana. Sefalana, as you know, is a diversified retail group. Chandra, round of applause for him, please. Immediate to Chandra is Gulam Abdullah, CEO of Tenstar Holdings. As you know, Tenstar Holdings is a property listed company, the first to be actually listed on the BSc. Gulam, welcome as well.
Thank you.
We then have Ram. Ram, you know, most people really don't know your last name, eh?
You better skip it.
But for your information, Ramachandran Utapatu, he's the Chief Executive Officer of Choppies Enterprises. Welcome as well.
Thank you, Bakang.
And lastly, Com Peterson. He is the CFO of Seretse Holdings. Com, we also look forward to hearing from you in this panel discussion. And welcome.
Thank you.
Before we get into the panel discussion, I'm going to start by observing a few items which were raised by His Honor the Vice President earlier on in terms of, as a government, recognizing the role that BSc has in terms of providing a platform for capital, for companies to grow and to expand. Also talking about how the BSc plays an important role in terms of the development of the capital markets of Botswana. The audience here, most of it is actually entrepreneurs, and I suppose they're very interested in terms of learning from the gentleman up here in terms of their experiences. Actually, there's someone missing here. Grace. I've been wondering where you are. But it's fine. It is fine. ABC was supposed to be up here, but that is fine. I think your presentation did enough justice. So as I said, this Excellency did recognize the role that the BSc is playing in terms of providing that platform for companies to expand. I noticed the Madam Chair, or the Deputy Madam Chair, Tsipidi, did pant earlier on as well for the banking industry, but I actually want to join her in that particular point to say, yes, it is about the entrepreneurs today, but for my industry, for Nabo Rasiboni, my other colleagues I saw, Fleming here, we see the BSc also playing a very important role in our industry, and I'm glad Ramasid is also here, in terms of providing a platform for deepening our capital markets. I think TP did say we need to be bold. We need to issue more corporate bonds. And this one is for you, Re Makalemene, to say that, say in a very humble way, if we had to develop a new economic strategy, that one that builds from what you've already introduced in terms of the ESP, would want you to expand the ESP to look at our particular sector, look at the BSc, look at money that's available at pension funds, and look at money that's also available from other investors in terms of providing instruments for us to invest in. You, as a government, have a very good credit rating. The BSc has a good platform, is well regulated, and we, from the pension fund industry and asset management industry, we do have the money to invest. Put us together, we have an intermediary like TPD and them, issue those bonds, those corporate bonds, and then we'll invest. So that's just me punching for my industry. I'm going to go back now to the agenda. I've been given some questions beforehand, which I'm going to post to our respective panelists. But I also want to give an opportunity to the audience here in terms of affording them the opportunity to, to learn as much as possible, to pick up from the gentleman, as I said earlier, up here, from their experiences. I think the first question goes to Tenstar, Mr. Gulam. When you started off, you had a very small asset base when you listed on the BSc Venture Capital Board. Can you tell us about your company's financial situation at the time you decided to list and why you really envisaged listing on the BSc?
Okay, thank you. First of all, I'd like to thank the Botswana Stock Exchange for inviting us this morning. We're glad to participate and help wherever we can in encouraging future companies to list as well. We're going to keep it short. I saw somebody in the front row, I'm not going to mention names, tapping their watch. So, Turnstar Holdings was formed around the year 2000 to finance a single asset called Game City at that time. So I did not list my existing group, which was the GH Group, which is still a very large business on its own. But when I started building Game City, we were approached by fund managers, asset managers, who wanted to invest with us in this project because it was the first regional mall and it was an opportunity to invest in the property sector, which they were looking for at that time. So I had a choice. I could go the traditional vanilla route of putting our own capital and then borrowing through the bank, which is how we normally fund property. But when these managers came forward and wanted to invest, and they had certain requirements which I had to consider. First of all, it was easier for them to invest if a company was listed on the stock exchange for transparency and compliance purposes for them. Secondly, we had to look at the type of company, what form it would take, in order to meet all the shareholders' different requirements with regarding to their taxation planning, etc. So we listed a brand new company, Turnstar Holdings, and because it was brand new and didn't have a track record or balance sheet for 3 years, we went on to the Venture Capital Board for a period of 3 years. So we listed there very successfully. People invested with us. And after 3 years, then we migrated onto the main board. After we paid our dues, people saw, no, these guys are still in town, they haven't run away. So we'll continue investing with them. But from that point on, I'm just here to, everyone's got a personal experience on what listing has meant to Turnstar. It's given us options to finance our expansion in different forms or ways that suit us for specific developments. When we're looking for short-term funding to do a quick development, of course, the banks are there. When you're looking for long-term funding, the banks are also there, or you have an option of doing a rights issue. So you have all these various options of growing your company. And if the company does well, there's always takers. But it's been an interesting journey because we ventured out into Africa. We paid our dues there in terms of learning how to deal and how to do business. But it's been a worthwhile experience today with our expansion into Tanzania and our growth here in Botswana. And as a company, we're going to continue to grow. We've got very exciting plans because I think now, in terms of size, we've bulked up enough to be taken a little seriously in terms of the Botswana market. And we've got a lot of future plans. But listing has been good for us. It's worked well. The difference is with all the bankers sitting here, when you listed, they actually chase you. When you're not listed, it's the other way around. So that's one of the major differences.
I just want to learn from you. How was the transition, where you're managing a family business, you are the boss, you report yourself, to now get to the corporate side of things in terms of 10 staff, always reporting to a board, reporting to shareholders, and reporting to regulators as well?
Yeah, actually, that will be an interesting subject for new business out there who are considering listing. How was the transition? Painful. Painful. Because you're moving for an area where you're an entrepreneur and you're your own boss, right? You make decisions daily on your own. You're really not answerable to anyone. If you make a mistake, it's your call. If you do well, it's your call, etc. Now suddenly you've got a listed company. You're no more your own boss. You actually are under contract to the company, and rightly so. You have a board of directors from different backgrounds. Some may know the business that you are in, and some may not know. And their job is extremely important, although you may not like the input at times because you're going to disagree with them. You'll fight with them, you're going to get frustrated because you feel they don't understand the business or they don't have the risk appetite you'd like them to have, etc. But they have such an important role. It's their job now to ensure that the companies run well, and they have to look after the interest of all those other shareholders that have invested in your company. Those shareholders depend on these directors to do the checks and balances on the company. So if you can adjust your mindset, it's a different mindset, and you can shift to say, look, on this side I am going to be answerable, I am going to be accountable, I have to be compliant to all the rules and regulations. But the advantages of growth are so much better and easier that it's worthwhile. But it is two very different structures to work with.
Okay. Thank you for that, Mr. Gulam. I'm moving to you, Mr. Chandra Chauhan, in terms of Sefalana. You're one of the very first companies to list in 1989. I think it's intriguing just to find out, at that time, in 1989, given the context of a very small domestic economy, readily accessible funding from the banks, I suppose you could easily just walk to any bank manager and get the capital. Little domestic retail competition, and why? What necessitated the listing?
Okay. Can everybody hear me? Yeah. Unfortunately, in 1989, I was not the CEO of Sefalana, but I do know the background of it. Sefalana had been set up by a group of investors from South Africa, and they were quite diversified from distribution to wholesale to milling. And at some stage, the South African group was pulling out of Zambia, pulling out of Botswana, and the then management, including the late Julian Anganunu, together with 3 or 4 other investors, decided to list the company in 1989, and it was the first company to be listed on the Botswana Stock Exchange. And it was a successful listing. The amount of money raised in those years was not a lot of money. I think they just bought out the South African shareholder and set up a local business. And when I took over in 2004, there were only 16 million shares in issue. And the business was, at that time, worth close to 200 million, but it had gone through a phase where the business wasn't performing very well, and the market cap was only 64 million. But there lay an opportunity for us to then grow the business and really take out the net worth of the business and to expand significantly ever since then. We were not in the retail business, and we entered the retail business. We had certain manufacturing plants that we felt could support our businesses, so we decided to go into manufacturing. So, unfortunately, I was not in the position to have raised the funds in 1989. But subsequently, when we decided to expand outside of Botswana, and we have some presence in Zambia, and we have a presence in Namibia, we needed to raise a fair amount of money to do the transaction in Namibia, and it was 250 to 300 million Namibian dollars. Is that what we needed to raise? And we could have easily gone to the banks and raised that kind of money because our balance sheet was very, very, very strong, and our net debt position was very minimal as well. But the one particular issue about Cephalana is that 100% of the shares are a free float. There is no dominant shareholder who controls the business. And I think that's very unique. It's the only company on the stock exchange that has that unique shareholding. And 92% of the shares are held by citizens. And we felt that this was an opportunity for citizens to participate even further, and therefore we decided to go and raise money through a rights issue. And we were able to raise that very easily. The issue was oversubscribed, and we were able to do that transaction. We borrowed a little bit extra. We raised a little bit extra money so that we could fund future growth as well. And that enabled us to do property expansion that we're doing currently to the tune of about 200 million. But the bottom line of all that is that it was the stock exchange and the ability to issue more shares and raise funding through the market that enabled us to get to where we are.
Okay. Great, thanks. Maybe just another question for you, Mr. Chanda Chauhan. You operate in a very competitive environment, a very competitive industry. How do you strike a balance between giving, or rather sharing information with shareholders and not giving away your tactics as a Cephalana Group?
Yeah. Fortunately, I trained as a CA in England, and obviously the size of the companies and the values of these businesses in the UK are phenomenal. So I was kind of exposed to much, much larger companies where the revenue would run into billions of pounds, and the profitability of these businesses would be also in billions of pounds. And it was that exposure, really, being at press briefings when the results are being announced, see how questions are being tackled, what sort of responses that you get. So I think it was that sort of experience and that exposure really made the difference. So when we did, I won't lie to you, but when I had my first press conference about 12 years ago, I was extremely nervous. But I think that the investors in Botswana, as well as the press and the brokers, etc., have been very forthcoming and supportive of what we've been able to do. So it hasn't been that difficult, and the journey has been excellent.
Great. Ram, tell us about your story. I believe you approached as back as 2005, 2007 to list, but your listing only materialized in 2012. Can you tell us a little bit about your hesitance, that fear of listing?
Thank you, Bakang. One thing is to have a wish to list, and another thing is your company's listable presence. That's two different issues. Okay. Rome is not built in overnight. And it was a purely family-owned company. When first we needed to sign a check, sharing with somebody else, that itself was a problem. Okay. Then you just get involved in transforming a family business into a broader partnership. From the broader partnership, you consolidate the books and you consolidate the entities into a listable entity. I wish to acknowledge there's a lot of people played a big role in motivating me and other shareholders. I can acknowledge the man sitting right in front of me, Mr. Rizwan Desai. He played a significant role in giving us the right advice. KPMG, for example, they were very instrumental in getting this company ready to a listable entity. It was difficult. Naturally, families and individuals all will have their own reservations and interpretation about control, transparency, and succession. A lot of issues are there. We just have to tackle one by one. And I was fortunate in succeeding and getting it right.
Thank you, Ram. And Com, one of the things that has been very clear is that when let's say we're listed, after listing, you begin to assume more risk. Will you just share with us a little bit more in terms of how the impact of the listing and its associated capital that you raised had on your strategy of becoming a Pan-African flagship?
Thank you. Certainly the capital helped. It wasn't a huge amount of money back in 2002. It was 30 million pula. But what was more the driver of it was that you brought in new shareholders, new non-executive directors who challenged management, who challenged the current thinking. And that helped to develop a Pan-African strategy that we believe has worked out reasonably well so far and still work in progress. But it was really new ideas, challenges to management, challenges to the existing quo, a recognition that Botswana is a reasonably small market. It's still our largest market for Letsego. But it pushed us to see where the business could go. And really from a Letsego perspective, what we're very proud of is that we are in 10 countries today. We are based out of Gaborone. The head office is here. And we're a very proudly African country, but with very significant Botswana heritage.
I mean, people keep talking about Botswana's comparative advantages. How have been these advantages for you? I mean, you've expanded to the likes of Lesotho, Namibia, to East Africa. Have you seen these comparative advantages come to your advantage, really? Have they actually helped fuel your expansion, or rather the reception that you've gotten from some of those markets that you've gone into?
I think it certainly helps. Botswana's reputation does assist. And certainly from an IFSC accreditation, while there's always more that can be done around that certainly helps our competitive position. So all in all, we find we are challenged. Is Botswana the best place still to be? But we believe that it is.
My name is Martina Sebone. I work for Investec Asset Management. I've got a question for Mr. Chauhan. First of all, let me congratulate the panel on what you've all achieved and for flying our national flag so proudly across the continent. Mr. Chauhan, my question to you is around dealing with institutional shareholders in your business. You're an entrepreneur in your own right, long before you became CEO of Sefalana. Please just share with us some of the frustrations that occasionally come your way. Because as an entrepreneur, you naturally move very fast in implementing a strategy. You naturally have an eye for opportunities. And very often you've had to go back to your shareholders, depending on the size of those opportunities, to get shareholder approval. So I guess my question really is, you've got institutional shareholders who are not necessarily entrepreneurs, they're investors, they've put money in your business. Do you find sometimes that in implementing your strategy, particularly in your case where you are a diversified holding company, and for very good reason, you have chosen to go that route, where some of your institutional shareholders perhaps would like you to stick to a core strategy or a core business segment? If you could just share with us how you deal with and whether the institutional shareholders have added any value in terms of giving direction, or it's been a frustration, really just for the benefit of some of those would-be companies that come to list on the exchange. If you could just share that experience with us. Thank you.
Thank you, Martinez Siboni from Investec.
Thank you, Martinez. I must say that in Botswana, we haven't really found that the regulatory environment has been any impediment in us growing the business over here. In fact, from a stock exchange perspective, I think that we've always managed to discuss with them, and they've been very supportive in trying to help us achieve what we wanted to do. We basically inherited a diversified business. In fact, sorry, I lie. We did inherit a diversified business, but there was a time that we had very little business other than just a 40% stake in the Metro Cephalana at that time and some properties. And that's what we started with 12 years ago. And at that stage, when we were with Metro Cephalana, unfortunately, Cephalana didn't have management control of that business. And one of the first things I felt that we needed to do was to bring back management control of an entity back to Botswana. And I think at the time, the institutional investors who had 20% of Metro Cephalana at the time, and you, Investec, being one of them, assist us in that process, and we were able to then put enough influence to exit a management contract that we had previously been in. So from being a minority shareholder of 40%, we eventually ended up with 100% of the business, and we took back management control of the business. And because we were able to take management control, we were able to expand that business significantly over the last 10 years. The brokers, the asset managers have always been very supportive of what we've been trying to do. And we've always engaged with them and been very transparent and actually disclosed what our path was going to be over a 10-year period. And I think that we had a lot of buy-in from everybody that were our existing shareholders. But I do agree that there are a number of shareholders who felt that we should concentrate purely on the FMCG business, FMCG being fast-moving consumer goods business. And we felt that, economies go through various stages in life, and if you are just dependent on one part of an industry, and if that industry suffers in that particular year, you don't have anything else to fall back on. And I do get, at least twice a year on occasions when we do our results presentation, get asked that why don't you diversify, why don't you exit some of the non-food businesses? If you've looked at our results over the last 10 to 12 years, you will see that there have been the other businesses where that have supported us, where some of our dominant businesses have let us down, mainly because of economic conditions or whatever. And then we try and model ourselves on the Bidvest model. The Bidvest model is a very diversified group. They're also very big in food, as well as the motor trade, etc. Obviously, they're a giant compared to us, but we try and take that model because we've also seen that they also go through various fluctuations where some of the other businesses prop them up when some of the other businesses are not doing so well. So I think that over the years, we've proved that all the businesses will give you a good return on average over a longer period. It is possible that in the odd year, one of the businesses might let you down because of lack of activity. We at Sefalana, we do a lot of business with government, and sometimes tenders, etc., can fall outside of a reporting year. But that's not to say that we're not doing the business. We're constantly doing business, but sometimes we can't report the profits or the revenue because we haven't completed a contract, and then it falls into the next year. So you'll find that on average, we are showing a constant growth, and we are showing growth in all the various sectors that we are involved in. But I think it's through the interaction with yourselves and the brokers and the asset managers that we've been able to convince them that what our path is we believe in it, and it's sharing that path with them that we've been able to overcome those issues.
Good morning, everybody. Amit Begevda, MD of IPRO Botswana. I would just maybe shoot just two very simple questions, and it's open to the panel. The first one, I do understand that all of you seated here are engaged or currently engaged in an African expansion. And very rightly said, you are different level in terms of maturity in your expansion cycle. So my question, the first question really is, I mean, being listed, obviously there's a lack of flexibility with regards to your growth story in Africa. So based on the different cycles where you currently are, does the fact of being listed, does it help or does it constrain you to properly tackle this African expansion? And at the same time, given the fact that obviously it is a work in progress, I'm not sure if you already know where you're going to be in 5, 10 years' time or 20 years' time in Africa. And it's so volatile as well, so is it easy to engage with your investors in terms of confidence, in terms of stock market behavior as well, for this journey that you're engaged into? And then secondly, due to this relatively small size of the Botswana economy and the Botswana companies, including yours, versus vis-a-vis much larger African companies, do you foresee over the next 5 to 10 years a certain consolidation happening at the level of Botswana companies just because they're expanding into Africa? Thank you very much.
Before I answer this question, once again, in this room, there's a mindset that needs to be changed with each and every one of you sitting there. We are right now in Africa. We are not outside Africa, okay? Historically, the mindset is that if you were part of the old Rand monetary system, where it be South Africa, Swaziland, Namibia, Botswana, etc., that was us, and then the rest is Africa. We need to stop using this term, please, Africa, like it's out of our jurisdiction, like we are not part of it. It's another world out there. That needs to stop. Please change your mindset from today. Now, your question was in terms of being listed or private, what is easier to go out into Africa, if I understood correctly. We know, to be straight also, there are different listed companies and there are different personalities. The 4 people that you see sitting up here come, I would say, not so much from a corporate background, but more from entrepreneurship. Maybe we have a higher appetite for risk than you would find under normal corporate MD. To go into the word sort of Africa today is not difficult, it's easy. There are words I can't use, but you need something starting with a B to go out there and get it done. Let me tell you something. Don't let the banks tell you that there's huge risks out there. Risks have to be identified, number 1. Number 2, if they are manageable, then if you've got 70% of the risk covered and 30% unknown, go into Africa. Don't let the banks stop you, because their own businesses are not risk-free. You understand? Right? So be bold. Please be bold. Go out there. And it's not Africa, we are all one. There's hundreds of millions worth of population waiting there for us to serve us. There's big markets waiting for us there to serve us. Africa is raw, be bold, go out there and do business, whether you are private or listed, please. Thank you.
Perhaps if I just make one quick comment on it, but it does help that you are listed when you go to these other countries. The profile of your business is significantly appreciated by wherever you go. Governments, bankers, institutions, asset managers, etc., take you a lot more seriously when you go to other countries. And wherever we've been going and we are exploring many countries within the region, we get given very good reception and given the attention that we always look for.
Good morning, ladies and gentlemen. Unfortunately, I was not prepared for a question, but I will just take it as it is. I have been asking myself a number of questions. I haven't invested into the stock exchange, but I have shares in Tenstar. But I still don't understand what's the difference between the stock exchange and the bank. And most of us, as entrepreneurs, we can't just invest without understanding. And that's one of the reasons why most of us seems to be quite reluctant. Yes, at a very high level, you can invest because you understand. But even I am now, I still don't know what is all about stock exchange. I'm still giving myself a bit of time to go and understand it. But I think, as you have mentioned, you need to diversify in other countries. I have tried my best to try and set this as an example. And I'm not just operating within my own country. It's very important for grow the business inside and across board. And I cannot go beyond it. As I've said, I didn't actually prepare myself. But it's more encouraging from what I heard from few during our tea break. What is it all about stock exchange? I think I'm going to give myself more time. And all of us here, I think it's very, very important for us to know what's happening and we can invest on it. Thank you.
Thank you, Ratlasala. Maybe Ram, would you want to answer that? I mean, Ratlasala, as he said, he's still battling with this issue of maybe using banking finance or maybe tapping on the capital markets in terms of raising money from the stock exchange. Just in a few words, if you could make that distinction, and maybe the advantages or disadvantages between the two.
The two issues is that one, if you're raising debt, you take all the risk, and the bank will lend you money, and the bank, you are indebted to the bank to pay the money back. But if you take money as equity, the investor is sharing the risk with you. In a smaller way, he's an entrepreneur, passive entrepreneur or passive investor along with you. That's in a simple way to define this. I hope that clears. Or a pool of investors get together and float the company in the stock exchange to become a corporate entity. That's a company and its investors. Or you take your money to the bank to invest, to earn an interest on the other side.
Good morning, my name is Tewe Manake from Vantage Properties, and I'm hoping to one day dilute the gender situation. First of all, the question to, I think, all of you is, in your experience and basically your aggression in the market and trying to expand, what has been your feel of the institutional investors when you're trying to move on into uncharted waters, particularly Mr. Gulam?
Once again, I'll talk from personal experience. When I started the project in Tanzania, GH Group, I took it to the Tenstar board to say, gentlemen, here's a huge opportunity with the University of Dar es Salaam. They're creating an investment corridor. We have this opportunity to put up a development, a mall, some housing estates, etc., etc. Nope. The funds, the asset manager said, no, finish, not interested at all. You go take the risk on your own. If it works well, we'll see if we want to put it into Tenstar. Right. And that's what happened. The GH Group developed it, completed it on our own strength, waited for it to run 1 or 2 years. When the numbers were looking good, the development risk was over, the leasing risk was over, etc. The board and the fund managers were more comfortable because the income stream was in place. At that point in time, we put it in to Turnstar at a huge profit. Make no mistake. Make no mistake. So, your fund managers sometimes are prepared to lose a bit of the upside profit in order to have certainty for the funds that they manage on behalf of their shareholders. But I think that the managers and the fund should also start learning to take slight risk, calculated risk, opening their minds if we want to go into bigger markets.
I just want to reiterate the comments made by Martinez earlier. The job done by the companies on the panel there has been tremendous in terms of the value that they have added to pension fund members in particular in Botswana. So I really want to commend you for the work that you've done. I think, and this is more of a comment rather than a question, is that one of the key benefits to companies listing, and this question is really directed to the large private companies that are in the room today, is that, you know, in many instances, as entrepreneurs, you would have started your businesses and grown them, and they would have done well. But there comes a point where succession is an issue. And the great thing about being a listed company is that you are in the public eye, and it's a lot easier to attract talent. And so to my mind, you know, Chandra's story epitomizes this, because when Chandra got involved, and he's being very modest about what he's done at Sefalana, he's turned around that business, and it's done tremendously. But I'd put it out there to say that had Sefalana not been a public company, it's unlikely that it would have been able to attract a manager of the caliber of Chandra. So for the private companies here today, being a publicly listed company gives you the platform to market your business to the talent out there, and you'll find that in many cases they will come to you and seek to join you, such that by the time that you are no longer able to run the business can effectively continue in perpetuity. And granted, you know, you sort of have to give up some control in order to do that, but trust me, from the fund managers in the room today, just like they've partnered with the likes of Choppies, Letseho, Turnstar, Sefalana, all of whom have added value to our clients, we're ready and able to partner with the private companies in this room today should they list. So it's just really more of a statement rather than a question.
Thank you, Tapulo Homsuli, Alan Gray. Tom, we don't want to leave you out. Don't feel lonely today. I think there is a question for you. You're one of those entities that have explored, you know, various options in terms of instruments on the exchange. Can you just maybe for the audience, just share with us your experiences in terms of what necessitated the need for those instruments and how maybe different business can actually tap on those kind of instruments? Because I think the message we shouldn't leave everybody here with is that there's only, you know, equity that you can raise out of the exchange. There's a lot of other debt instruments that you can actually raise from the market. Kom?
Yes, certainly the initial route to listing is just normal, ordinary shares that share the risks and rewards of the business. But equally, there is debt instruments that are becoming more and more prominent. Letsego has approximately 1 billion rand in debt bonds on the Johannesburg Stock Exchange and about 500 million pula on the Botswana Stock Exchange. So we would like to see that area develop further, and it gives investors alternative mechanisms to gain exposure to the party if they liked it. Equally, lesser used, but there are preference shares that can be used as an instrument that gives, in most cases, a guaranteed return. So it's, while equity is primarily what's used here, there are different alternatives available.
Okay. Thank you, Kom. I think we're now left with a minute or so. There's a question right from the back, Remaje from Apex.
Thank you very much. My question to the investors is that I've seen that they have built successful and listed entities, So what I wanted to know is that what kind of platform have they created, to be able to guide the SMMEs who also aspire to be in the same, space as they are? Because if we are to take on Africa, and we think there is an opportunity to take on Africa, we need more successful enterprise which can list, which can, reach the same level as your entities. But I don't see any platform where we get guidance or where there is mentoring, because in other markets, you see such platforms where successful investors come, encourage, startups, guide them, and then even write books on their success stories or their challenges, where we can then understand exactly how, they made it or how they became successful. Because I strongly believe that Botswana can be a good platform for us to launch into Africa. And the last question is, what is your succession plan? Because a lot of our listed entities don't have, deputy CEOs or successors. That should the CEO step down, what is the next move? Thank you.
I know we didn't write books here, okay? But you need to find your own niche. Okay, when we started off 15 years ago, this was a very small company. We found our niche and we grew the company to this level. Same way, this itself is a great platform. This forum itself, it gives a lot of opportunity for the budding entrepreneurs or budding enterprises to find the opportunities, what is available in Africa, and how the others did it. I think this country is offering a lot of opportunities, and we need to utilize that to grow ourselves. It's a dog-eat-dog market. Nobody is going to come and help you out holding the hand. You need to find your own trajectory, and you need to try to develop your own business models based on what your strength is. That's very, very important.
This is a question for Ram. We've been listed for many years. Many of us are representing listed companies. But he's done a step further. From here, he's going to list on the Johannesburg Stock Exchange as a secondary listing. I'd like him to share a little bit that experience, because I think that was a bold step. Thank you.
One thing, JSC is one of the most rated listing agencies in the world. I think they rated number 1 or number 2 to do ease of business. And we never had any issues in taking our business to JSC. Absolutely, it was a smooth transition. We can watch, Mr. Desai is sitting here. He also was involved in listing the company in JSC, and we got our consultants, KPMG. That stock exchange is very friendly to do business, and they're very, very professional. Turnaround time is 2 days. If they tell you 5 working days means 4th working day, you will 99% you bound to get a reply. It is very unlikely that it goes to the 5th working day. It won't happen. And we felt that there's a very professional approach, and we were very happy. And it was a great experience. And I even thanked JSC in that listing date for all the support they did.
Mine goes to Choppers. We have seen development of Choppers since the beginning of its listing. But when you look at the transactions, the way it is been performing over those years, the share price going up and down, but when you declare the dividends, we see that you declare very small amounts of dividends, particularly to small people who are holding small numbers. But we can also see when you obligate 8 million pula to sports codes. are you not considering that we as shareholders should enjoy the benefit before you go to charity?
Tough one.
Yeah, Chandra.
Secondly,
Yeah.
we are saying, Choppies, we are not against expansion into Africa. But we are saying where the footprint we have to consider as first, so that we can get the benefit of nature in this company to this level. Thank you.
That was not only a charity, it was a strong advertisement for Choppies because it was an African Youth Games. We needed to get our name known in the continent. So that is a well thought out advertisement expenditure rather than a charity. Let me. That's number one. Number two, when we listed the company in 2012, if you read the prospectus, it's very clearly mentioned that 1/3 of the profit will only be distributed as dividend and 2/3 will be used to expand the business. And I'm still standing on to that. We haven't run this company to satisfy the analyst or anybody for quarter to quarter. There's a well thought out process for expansion in the next 5 years. And we're sticking to our expansion plan and we're sticking to our dividend policy as well. There was no change whatsoever since we listed. I hope that answers everything.
Okay. My name is Masero Mateo. I'm a farming entrepreneur come strategy consultant. I'm interested in returns for small investors such as myself as well. Considering the rise in household debt for Botswana, recently it was announced that Botswana have a lot of household debt. I would say that we are seeking cash returns in terms of dividend payouts, as opposed to value investors who would be seeking a long-term return on their long-term value on their investments. And we borrow a lot of money seeking this return, this value, this monetary value. Let's say, I want to know if your strategy can give back in one way or another. If you have a strategy to give back with the plan for financial inclusion, if it gives back value, not just loans and loans, will it be prudent for me to purchase, let's say, stock to try and balance it out so that at least when I'm paying, let's say, the interest fees, I'm also getting a little something on the other side for supporting the company's growth? A less stringent dividend policy on the pockets of the investors who are small investors who cannot make value returns. Thank you.
It's part of the overall balance. As a listed company, you've got shareholders, but you've got many stakeholders. And trying to achieve that balance is always difficult. I think what you do find as being a listed company is that the profile is higher, and therefore you have to continuously communicate your message and your story to many different either institutional investors, individual shareholders, regulators. So it's a fine balancing act. It can be managed, but it does take a lot of time and effort, and it is something that it's the trade-off between the higher profile you get from being listed versus the opportunities that it creates, plus the stakeholder engagement that you have to manage. From the specific points, whether I would say to invest in Letsego shares, that's a personal choice. We all probably believe that our share price is undervalued. No respected CEO will say otherwise, but all we can say is that it's a personal decision that you have to make. Look clearly at what the company has committed to do in terms of dividends. Choppies have just mentioned it was very clearly articulated in their prospectus as what the dividend policy would be. From Lesego's perspective, it's an area that we've communicated quite clearly, that we will pay out approximately 50% of profits after tax every year. And so last year in 2015, we paid out approximately 380 million pula in dividends to shareholders. So, but it's a personal decision that you have to make to balance with all other aspects of your personal finances.